Build and maintain relationships with internal stakeholders, such as accounting, IT, legal, audit, investor relations, FP&A, and tax departments. Building and maintaining strong relationships with internal stakeholders is a fundamental Treasury responsibility because Treasury activities affect nearly every operational and financial area within an organization. Treasury professionals collaborate with departments such as accounting, information technology, legal, audit, investor relations, financial planning and analysis, procurement, operations, and tax to support coordinated decision-making and efficient financial management. Effective internal relationships improve communication, strengthen operational alignment, and enhance organizational performance. Treasury teams rely on timely information from multiple departments to manage liquidity, forecast cash flows, administer financing activities, and mitigate financial risks. Strong stakeholder relationships also help Treasury professionals identify operational challenges early and develop collaborative solutions that support both departmental objectives and broader organizational strategic goals. Collaboration with accounting departments is especially important because Treasury and accounting functions share responsibility for financial reporting, cash reconciliation, debt management, and regulatory compliance. Treasury professionals work closely with accounting teams to ensure accurate recording of cash transactions, investments, debt obligations, and foreign exchange activities. Coordination is necessary for month-end closing procedures, financial statement preparation, bank reconciliations, and compliance with accounting standards. Treasury professionals also assist accounting teams in evaluating hedge accounting treatment and interpreting financing arrangements. Effective communication between Treasury and accounting improves reporting accuracy and reduces operational discrepancies. Strong collaboration ensures that liquidity management activities align with financial reporting requirements while supporting transparency, audit readiness, and effective organizational financial governance. Relationships with information technology departments are increasingly critical because Treasury operations rely heavily on digital systems, automation tools, cybersecurity protections, and electronic banking platforms. Treasury professionals collaborate with IT teams to implement Treasury management systems, integrate enterprise resource planning platforms, automate payment processes, and strengthen cybersecurity controls. Treasury and IT departments also coordinate disaster recovery planning, system testing, access management, and data protection procedures to ensure operational continuity and secure transaction processing. Effective communication between Treasury and IT improves system reliability, operational efficiency, and reporting accuracy. As organizations adopt advanced financial technologies and data analytics tools, strong Treasury IT partnerships become essential for supporting automation, managing cyber risks, and maintaining resilient Treasury operations across global business environments. Treasury professionals also maintain important relationships with legal, audit, and compliance departments to ensure Treasury activities comply with contractual obligations, internal policies, and regulatory requirements. Legal departments assist Treasury teams with loan agreements, banking contracts, derivative documentation, and regulatory reviews related to financing and risk management activities. Internal and external audit teams evaluate Treasury controls, operational procedures, and compliance practices to reduce fraud and operational risks. Treasury professionals cooperate with auditors by providing accurate documentation, transaction records, and policy explanations during audits and examinations. Strong collaboration with legal and audit functions improves governance standards, strengthens internal controls, and supports compliance with financial regulations, organizational policies, and industry best practices throughout Treasury operations. Relationships with investor relations and financial planning and analysis departments are essential because Treasury decisions directly influence organizational liquidity, capital structure, and financial performance. Treasury professionals collaborate with FP&A teams to prepare cash flow forecasts, evaluate financing needs, analyze capital expenditures, and support budgeting activities. Investor relations teams rely on Treasury insights regarding debt strategies, liquidity positions, market conditions, and risk management initiatives when communicating with shareholders, analysts, and credit rating agencies. Treasury professionals also provide guidance on financing alternatives, interest rate exposure, and market developments affecting organizational performance. Effective communication among Treasury, FP&A, and investor relations improves financial planning accuracy, supports investor confidence, and strengthens strategic decision-making related to capital allocation and long-term financial management. Collaboration with tax departments is critical because Treasury activities often involve complex tax implications related to financing, foreign exchange management, intercompany funding, dividends, and global cash movements. Treasury professionals work closely with tax specialists to evaluate withholding taxes, transfer pricing considerations, repatriation strategies, and tax-efficient financing structures. Cross-border Treasury activities may also involve regulatory restrictions and international tax compliance requirements that require coordinated planning between Treasury and tax departments. Treasury professionals consider tax implications when structuring debt agreements, managing intercompany loans, and implementing cash concentration or pooling arrangements. Effective Treasury tax collaboration improves financial efficiency, reduces compliance risks, and supports strategic capital management while ensuring alignment between liquidity objectives and organizational tax planning strategies.